The vision was to simplify the world of insurance for consumers and make it as easy to attach homeowners insurance to a mortgage as it is to get trip protection from Delta.
You guys have been incredibly successful, raised over $50 million. You've got over 400 employees. You're bringing in 750,000 leads a year. You guys have really dominated the B2B2C on that loan servicing side.
One of the hardest things you do with B2B2C marketing is I can spend a long time courting you as a partner, get a signed contract, but nothing comes with it from either side.
Tale as old as time when it comes to channel partnerships.
And so you have to activate it, and you have to be good at activating it.
I didn't understand it when I was younger in enterprise sales. And as I got older, I realized if you don't impact a key initiative, you're not getting $1 million+ deal.
If you're in these partnerships and there's a pretty complex ecosystem to generate a lead, if you don't figure out a way to get in all of those channels and then get them in the right way and the best practices, you'll fall flat.
Jeff, I'm excited for this, man. I wanted to get you on the show for a long time. And where I really want to start this out is, tell me about being unqualified.
So out of college, I joined an IT staffing company, an IT services company, was in sales for them for 3 years, moved my way up, really enjoyed it. Good company culture, learned a lot there, and just got promoted to leading a national account pretty early on. I was making good money.
So how far out of college were you?
3 years.
Okay.
3 years out of college. And through someone in my network, I get introduced to a guy, an investment group that is starting a digital insurance agency. And they're looking for a day one operator, someone to come in. They wanted the fresh perspective, which is one of the questions I asked of why are you entertaining me as an option?
I haven't done this at all.
And so I took a lunch and ultimately I joined. But if you think about it, at the time, I'm 3 years out of college. I've never hired anyone. I've never fired anyone. I've never led an inside sales team. I've never run a budget, never run a P&L. I've never been put in a situation where I have to build from scratch or do anything like that. I've always, at the first job out of college, there was a wheel you'd follow, the sales process. And here I am having to try to figure all of that out. And so when you talk about unqualified, I don't know if I could be more unqualified for that. And it's interesting, the reflection moment of why take that job, why do it if you're not qualified. I think those jobs just don't come around all that often.
Yeah.
And for whatever reason in my head, and maybe through some mentorship of just asking questions about should I do this or not, I think that job is so rare to find where someone will trust you to be a day one employee. And I think it's worth it if you can do that and know that if you really need to fall back, you can get another corporate sales job. So that's how I got into it. And, for me, if I think about the key things that got me through it, and I use this today all the time when hiring and talent development and just thinking about how to get through unqualified situations.
Yeah.
It's work ethic, it's attitude, it's coachability. And so for me, going into that situation, I knew those things I could control and I could be the first one in, last one out. I could study, I could learn on the weekends. I could do whatever I could to just literally outwork anyone to make it a success.
Yeah.
I came in with a positive attitude. I was passionate. I'm called an optimist today by my team. And part of that is just, I want to have fun. I want to create a good vibe and, not letting small things get in the way and not knowing how to do it. And then the last one's the most important one for me, which is coachability.
Yeah.
And just being humble to the fact that everything is a learned behavior in this world, or at least the things that we put ourselves through. So, I always had mentorship. I mean, you've been a mentor for me. I've asked you a ton of questions. And for me, that was key of, there's fake it till you make it, which I think is good in some ways of being confident.
Sure, absolutely.
But in this one, you don't want to fake not knowing how to do certain things. So I just got mentors all over the place that were my guide to help figure out how to get through that.
It's one of the interesting things I think that you mentioned, and I wholeheartedly agree with this, is Jason Lemkin had a tweet a long time ago that said something along the lines of, sometimes in your career, and it typically only happens once, somebody for some reason sees something inside you and it's like you get a chance that you probably just shouldn't have gotten.
Yeah.
When you look at like it on paper, there's a million other people that are probably better on paper, probably earned that maybe more through their experience to be able to get it, but they take that shot on you. And I love what you just said, because I wholeheartedly agree. And what he said was, you just do whatever the hell you need to do to make that happen.
Yeah.
Prove that person right. Whatever you need to do to prove that right, when you get that chance, take it. And I've personally lived exactly by that as well. That's so funny that you say that. And I totally agree. I totally agree. Now you did it again.
I did it again.
You did it again. So when you joined Matic, you were also the first employee, correct?
Yeah.
So, and so
I like that position.
Yeah. Why is it? What is it that intrigues you so much about that spot?
It's an interesting question. I think for me, one, it's like entrepreneurial, it's like adjacent.
Sure.
Like super entrepreneurial. You're day one, but it's not. But I'm piggybacking off someone else's idea. They're funding. I'm not risking all of that personally, and so it's like one level down. And I don't know. I just love the autonomy. I love building. I love not knowing what's next, and it just happened that way. I was at the first agency for 3.5 years, built a nice team and loved it. And just by happenstance, met one of the co-founders of Matic at a carrier conference, a small carrier conference, and we shared an Uber. And we shared an Uber on the way back. And on the way back, he was pitching me on coming over. And they were just getting going. And I fell in love with their vision, fell in love with what they were trying to accomplish. And it just felt like a bigger opportunity with being VC backed. And, what they wanted to accomplish was very grand.
Yeah.
It was a big leap of faith, and it took a lot of conversation back and forth to get to that spot, but I'm obviously happy I did.
No, 100%. And so let's talk about that a little bit, right? You guys have been incredibly successful, raised over $50 million. You've got over 400 employees. You're bringing in 750,000 leads a year. I'm going to say that one more time. 750,000 leads a year. That's a wild number. And you have, this is one of the things I think that I have the utmost respect for what you've done is you're the first employee and you're still the president of the company. That's really impressive, right? Because typically, and I've been part of a number of these scaling startups, but you've got people that are really good fits at specific stages. Most can't evolve the way that you did to where you're getting here. I want to circle back to that. But before I go there, let's talk about this 750,000. This is the area I'd love to kind of get in the weeds in. You guys have really dominated the B2B2C on that loan servicing side. I know you do some origination and things like that as well, but one of the things I always thought was really unique was the fact that you did start on the loan servicing side. Could you break that down? I think the beauty is on this audience, most people will know the difference between origination, because that's where a lot of the traditional agents are getting a lot of their leads from loan officers and things like that. But not as many are probably getting them from the loan servicing side. Why was that an opportunity?
Yeah, I think it's worth going just a little back of like how we started. So Matic, short for automatic insurance.
Never knew that.
Yeah.
That was never tied to Ben Matic's name.
No, in fact, it's horrible because every time we're in a meeting, he has to address the fact that he can't spell, and the company's not named after him.
I never knew that.
Never
knew that.
And they went to a third party too. So Ben and this co-founder, and they came back and said Matic, and they liked it. And then, it's like, are we really going to name the company Matic when your last name's Matic, spelled differently? And so short for automatic. And the whole concept was born out of the problem in the mortgage closing. And then I'll get to the servicing side. But, the vision was to simplify the world of insurance for consumers and make it as easy to attach homeowners insurance to a mortgage as it is to get trip protection from Delta. Turns out it's not that easy. But that's been the guiding spirit for us the entire time of how can we just simplify that experience? How do we connect with all of the right carriers? How do we get our slowest carrier? Because we're only as fast as our slowest carrier.
Sure.
That's the challenge with technology, is that we can build all of our own tech, but we still need to rely on getting all of the access from the carrier.
Yep.
And getting the product availability in all 50 states, which is a challenge. And so that's what we've been striving for and have built the best home insurance platform, I think, in the market today. But on the mortgage origination side, where there's a clear problem, customers need to get homeowners insurance to close. Still very passionate about that. It's a very distributed and locally sold product today.
Typically, a local agent is working with.
It's still in that ecosystem. It's the realtor refers to loan officer refers down, and it's just that whole bottom up strategy. You can't just. It's way harder to get an enterprise partnership and trickle that down.
Yeah.
We typically say the tail wags the dog in the sense that the loan officer is operating as an independent franchisee, or at least, owner operator.
Yep.
And it's hard to push that down enterprise wide. So you have to go distributed and you have to go, out to the loan officer, which is just a tougher scale. And there's only 4 to 6 million loans, new home loans each year. And there's 65 million plus outstanding mortgages. So that's the area we started to guide towards. Was there's so much immense data within that mortgage servicing platform that they have on customers, and simplifying the world of insurance to us means leveraging technology to empower a better customer experience and down to the agency, and being able to provide quotes and be able to provide real-time access to rates and coverage and advice, and then either be able to bind online or bind with an agent. And we just started to identify this very large population of customers that was not being served. We're essentially inventing this embedded insurance space for mortgage servicing. We weren't taking over something.
Well, it makes sense because, once anybody that's ever bought a home has probably got that surprise letter in the mail that said, oh, the person that you've been working with, that you built a relationship with, well, they're no longer who you're going to be working with. It's now XYZ company, PNC Bank or Mr. Cooper. There's tons that do it. But so how, it's probably a question I never even asked, but just how are you getting their attention, right? Because they're not necessarily, they could shop at refis and stuff like that, but like what are some of those trigger events that you're working with a loan servicer on that get somebody to think, oh, you know what, maybe I should be taking a look at this?
Yeah, so we've had to build a very omnichannel experience and work with the partner on the other side in a highly complex, regulated environment, getting them to participate in our marketing strategies together as a partnership. One of the hardest things we do with B2B2C marketing is I can spend a long time courting you as a partner, get a signed contract, but nothing comes with it from either side.
Tale as old as time when it comes to channel partnership.
And so you have to activate it, and you have to be good at activating it. And so we've built, different customer segmentation and leveraging technology to essentially pre-score customers in advance, leveraging data that they have on these customers, which is very powerful data. They're tracking your homeowner's insurance today.
Yeah,
and so we can harness that to figure out what's the right segment to go after. And, there's obvious ones. I know when you're renewing. I know when your escrow bills go up because of homeowner's insurance. And then we can integrate into all the different channels. And if you call into the call center, they'll flag it. You get an email. If you log into your portal, it's all connected in the same journey. And so that's when we work best, is when our partner operations team and marketing teams are integrated wholeheartedly into the partnership. And that's not an easy execution point, but that's where we found the most success.
How do you do that? What does that look like, right? Is this something that you have to get buy-in before they're a customer? Is that part? Is it almost kind of a disqualification process, and who you decide to bring on as a result of that?
It's 100% being. It's a lengthy sales cycle for a reason, and part of it is that you're going in and inventing something for them, which I do think is a challenge.
Sure, absolutely. Inventing meaning like they weren't doing this previously. They don't need to do this.
You're convincing them that it's a problem, and once and usually they recognize it's a problem and an opportunity, and then it's just a challenge to figure out where to place it within the organization.
Yep.
Oh, it sounds great, but like who owns it?
You don't necessarily have a VP of special projects.
Yeah, there's no line item today, or even where they have this, or in procurement or in legal and compliance. So it's all new, and so we navigate that space, and then we try to just go extremely deep from a relationship perspective on our organization and get many people involved, executives, head of all departments, involved with all the departments over on the other side. and make it that expectation up front in the sales cycle that in order to make this work, here's how it happens. We build the performa and then explain how the performa comes to life, essentially, by saying this is what it requires. And then we outline that in the agreement of this is what your duties are, this is what our duties are, and here's how it comes together, including weekly meetings, quarterly business reviews, certain SLAs and turnaround times on marketing content and things like that. And it's every partner is slightly different, but the ones that operate the best have someone who is in charge at an executive leadership level that wants it to be a success, and they're bought in. And the way that we generally do these partnerships is the partner generates revenue on a revenue share basis when we have success. So it's not we're not buying leads from them or doing something like that. So we are building an annuity. We're building a book of business with them together, and they're sharing in some of the revenue, and is great for us as far as our scalability of not having to pay as much to acquire a customer initially. We're paying ongoing for that customer, but it also holds us accountable together to the lead quality and to driving the right behaviors, and it holds us accountable. I mean, some of the toughest times, honestly, of thinking about like when we were under the most pressure was when the partner was aggressively trying to understand why conversion was down 2% or 5%, or contact rate was down yesterday versus the day before. And if you're on the other side and you're the partner, you're a little bit helpless to our agency and to our marketing machine and all of that. And so those are the questions you ask when we're sending you daily reporting files.
Yeah.
And so our team has to figure out the answers and to get better and to explain that, their world in mortgage is slightly different than our world in insurance. And especially the last couple of years, I mean, it was a challenge in the carrier market just to find the right product and availability. But like the partner cares about our success as much as we care about our success, which creates a unique angle.
It's interesting because they probably saw that as a ton of opportunity, meaning like you can see the numbers. What I'm hearing you say is you're deeply integrated within their systems. And I know this is like the big technology play of Matic just in general, but like you're deeply involved in their systems. You can see when their insurance goes up because you've got line of sight into the escrow accounts. So did you find that when they kept saying it's like, hey, we got all like, because I'm assuming there was a pretty big bump in across the board of we're getting all of these accounts that have insurance go up. You guys should just go to town. Did you have to set expectations on that, or did they know?
Did who know?
Did the loan servicing companies know, like, insurance is going up across the board? It's not necessarily that all of these policies were just not originally good policies for them to be in.
So every time we talk to the partner, we talk about every single conversation and interaction we have with them has to be a value-added experience, whether we sell them or not. And that's actually a big hurdle to get over.
What's that mean? Can you break that down?
So I think as a homeowner, if my mortgage servicer has my back and they've partnered with a company, they can scan my insurance every single year accurately and identify whether I have the right coverage at the right price with the right carrier based on where I live, and showed me in a digital experience without me having to put in one piece of information. That's a value add. Then if I take it a step further and I want to buy it, to be able to purchase digitally and apply it back to my mortgage, save money that way, or talk to an advisor. And if that advisor walks me through my situation, because now it's a high payoff situation where we don't have to just routinely collect 45 minutes worth of information from you.
Sure.
Like we know you. We're piggybacking off the relationship that you already have with your mortgage company. And so we focus on extremely high value conversations of advising you on what you should or shouldn't do and giving you the tools to make a decision. And so we're not going to win on every single one, and you're going to come back to us the next year. Because
you've already shown that you've already demonstrated value without asking for anything in return.
That's right.
And so when we bring this up again, maybe you were okay with your agent at that time.
That's right.
And if that agent's doing a good job, odds are they're going to get ahead of it and they're going to be doing the same thing. They're not going to do it exactly how you are, but they're doing it through review. Maybe they've built a really good relationship. They're doing a good job with their customers. But if they're not touching that customer, you're providing more value than what they're currently getting. And the next time that comes around, maybe they gave them the benefit of the doubt that first year, but it happened again. You're there.
Yeah.
now you're going to convert that.
If we look at it like there's only one bite of the apple, it's not going to work long term. And so we look at this like, and if the mortgage servicer looks at that, then they'll start to wear over it anyways. They'll say, okay, well, you took a bite, your conversion is X and it needs to be Y. And it's very like conversion focused, which it should be. That's how you generate revenue. Sure. But insurance is different. And I think people want to be heard. I think people want to learn and understand. And especially on homeowners insurance, what I've learned is compared to auto is it's way less understood because it's attached to the mortgage. The general person bought it when they buy a house. They set it, they forget it. It goes up 50% over 5 to 10 years. They don't pay attention because it's escrowed in and their bills are just more expensive. Taxes is going up. So, of the PITI, the taxes and insurance is rising pretty rapidly right now, and people need to start paying attention. And if they at least have an outlet of understanding why their home price and why their home insurance in that part of California is more expensive, and we can show that to them in a digital way and actually educate them, then at some point, they'll come back around and we'll have the right price at the right time.
Yeah, law of reciprocity or reciprocity rule. Like you're giving them something, and you're not asking for anything. And so if this continues to come around, they'll feel obligated to, if nothing else, probably give it a look.
And more importantly, from our positioning within the mortgage servicing ecosystem, all of the top mortgage partners that we've worked with have run studies to figure out if they work with Matic at all, especially if they buy a policy, how much more likely are they able to refinance or recapture that business? And it's all unanimous that it's a multiple times easier to recapture their business and that customer if they have a Matic policyholder.
Can you say, like, what do you mean? Can you just break that down a little bit?
So one of the, if you think about the mortgage servicing ecosystem, as whoever I'm paying my mortgage to, I really can't leave unless I pay off the mortgage or I refinance.
Yeah. Yep.
And so in a world where rates are really high, it's unlikely that I'll leave my mortgage servicer. If rates dip down and it makes sense for me to refi out, they want me to refi back with them.
Yep.
And so you're multiple percentages more likely to refinance and stay with that mortgage servicer if you have a Matic policy attached. Because if they're adding value through their experience, then customer will ultimately go back to them when they need to make that decision, which is more that's their core business. So that's been an extra lever for us to say, hey, the revenue is interesting, but we're helping you at your core business.
Yeah.
Retain customers.
Yeah, but that's what's actually going to get them to do it in a major way.
When those studies are run and there's a big uptick in the percentage of recapture retention, the amount of focus we get from the CMO, the publicly traded mortgage company, increases exponentially.
Oh, I have to imagine, because now you're actually affecting the overall, you become part of a core initiative. You're not this is interesting. We like this. We should do this. There's no reason for us not to do this.
100%.
To this is critical to our retention, which can move the needle in a significant, you move that. My guess is you move that. I'm just going to call it recapture rate. I don't know exactly what it is.
Recapture, yeah.
Is it okay? So you move that recapture rate. It's one of the most interesting things is that I didn't understand it when I was younger in enterprise sales. And as I got older, I realized like if you don't impact a key initiative, you're not getting $1 million+ deal. It has to be a key initiative. It has to be important to somebody that has executive power. Somebody that's on. If it's something that is agitating somebody at the executive level enough that they're going to make this a key initiative, and you can solve that, that's how you get those mega deals. Have you guys found that to be the case?
100%.
Yeah.
Yeah.
It's so interesting.
And you can tell by the partner itself of like who comes to the QBR, the business review, of how successful the partnership is.
Yeah.
It just comes down to engagement. And again, if you're in these partnerships and there's a pretty complex ecosystem to generate a lead, like you pass us data, we have to be inside the marketing channel. That channel has to become a lead. Then our entire agency runs their own process at that point, right, to sell the insurance policy. Mm-hmm. If you don't figure out a way to get in all of those channels and then get them in the right way and the best practices, you'll fall flat.
Let's talk about that. I'd love to talk about a big partner that you lost. You don't have to give any names or anything like that, but why'd you lose them? What'd you learn from it? What changes did you make as a result of that?
Yeah, that's a good question. So it was a good partner. Matic is a startup, and while we've built a good footing in this space, and we're the dominant leaders in the space that we're talking about today.
No question. You
there are big carriers out there. And if you own a mortgage company and you're a CEO and you have friends with these carriers, you start to ask yourself, hey, why am I partnered with this smaller startup? Like, why aren't we partnered with a big carrier?
Nationwide is an example.
That's right.
Yeah.
An example
They'll
like
go directly to it. And I've seen this.
to it.
Yeah, absolutely.
And so the team that we were working with did not want that to happen because they were happy with the partnership and all of that. And we were actually killing it. We were doing a really good job. But we eventually, through some turnover at that partner, we lost relationships. And like that relationship capital was gone.
Yeah.
And the only thing left was the person that all along felt like they should work with a big name carrier. And so it was a test to leave and go figure it out with said carrier. There was also, I believe, one of the concepts was maybe a reciprocal marketing experience where they'd be able to market to some of those policyholders at the carrier at the moment rates went up.
Yeah.
And so I think it was, rates went up and the carrier market crashed. And single carrier in a good market's not the best option for you. Single market in a bad carrier, really, really hard.
Yep.
And so it failed. It did not work. It shut down. And today there is no partnership and we're trying to get it back.
Why? What's the reasoning for them not coming back? Just the fact that
now it's just now it's again, it's relationships. It's tell me about like this person was gone. This person's gone. Yep. Tell me about like what you used to do here and who you used to work with. It's that type of thing.
So let's talk about that. What were some of the learnings from losing that?
I think one main one is how vulnerable, partnerships can be.
So true.
and it didn't. And then I think another one is just like the resilience of our team to just figure it out and like roll with the punches. Like of the three things, the work ethic, attitude, coachability, like that's like the attitude and the culture of the team to be like, hey, we got this. Like we're not going to really, it was a big portion of our business, not more than 20, 25%, but a big portion of our business. And I think we didn't even adjust our forecast.
That's incredible.
Like, I think we just figured out, hey, we have the agents, we have the people, we have the process. Like whatever things we were thinking about trying, let's just do them.
Yep.
Like whatever like ideas, like let's just do them. And I think some of those things it can shake you for a couple weeks, but you realize you're like, it's fine. Yes, that's vulnerable. We need to make sure that we have strong connections with all the partnerships. But at the same time, like we have people, we have good relationships elsewhere. Like let's make the most of it. And then every other partner arose.
So it's so funny. Like I know that feeling. We back in the day, we had a big carrier that was a huge part of our business. There was turnover. All of our main point of contacts were gone. We got new ones, and the new ones, they just weren't as high. And not that I think that they actually disliked the program. I really don't think that they disliked the engagement that we were running by any means. It's just they didn't have any personal connection to it. And when they looked at the different initiatives as they're going into a new role, for them to kind of come in and really put their stamp on it and execute on their vision, it's either you could pick up the previous people's vision or you could pick up on yours. If you didn't build that relationship, why wouldn't they? I don't fault them for trying that, whatever that vision is. But at the same time, I learned an important lesson at that point is like, I don't care how close your relationships are. Yes, that matters. You have to do that. It's table stakes. You have to do that. But you need to go wide and you need to go deep. You need to go up. You need to go down. You need to go left. You need to go right, because you don't have any idea who's going to come into that position when there's turnover.
We literally, like after that, created a 3x3 grid for every partner.
Love it.
Of, we need to have 3 people at Matic, 3 different layers deep at the other company. And that's probably bigger than that at this point. But if you look at the ones that you have, sometimes it's like your excuse is like the partner won't let you, like the other person's a gatekeeper and they're like, hey, my job is to be the quarterback. And, like you have to just figure it out. Because at that point, like if that quarterback leaves, then you have like no influence.
Nothing.
And if you need influence, now it's another thing if you have like 500 partners that are all equal, then it's run completely different. But if you have weight at the top, and you just have to figure out a way to like go heavy on the partnership side and that's a fun part of the job, to be honest with you. Like just being able to build relationships and key spots, both on the carrier side and the partners that we're talking about, because we can do 750,000 leads, but if we don't have a product to sell, it's the same thing on the carrier side. Like when the carrier markets go down, like those relationships matter.
So true. I love that 3x3, by the way. That is such a good idea. And you already talked about, you brought in so many different people. So like nobody's completely, walled off from this, but that's going to be a lot more difficult. So, that's so interesting. It makes so much more sense, right? Like how you got to 750,000 leads a year. You built really deep partnerships. You've built this machine of best practices that you're getting contractually put down.
Yeah.
And you now can objectively prove that you can impact their core business in a significant way. Those are like for a partnership, because and I've said it on this show a million times. Anytime I've got somebody that works in a partnership model, I love, because so many people are jaded by it, because exactly what you just said. You sign the deal and then everyone's pumped. And you're like, all right, we're gonna make a lot of money together, and then nothing, nothing. Maybe a couple policies.
No, we've had some really impressive logos that have done nothing.
I believe it,
and it just works out like that. And sometimes you like spend two years in a sales cycle, you launch the partner, and then they get acquired. And so it's just like those are that unfortunately happens more than you think. It's a very sometimes it works in your advantage, where a partner that wasn't that big gets acquired by a bigger partner, and then they just absorb the insurance partnership and they're bought in.
Yeah.
They're like, hey, this is cool. I'm glad you guys do this.
That's awesome.
And
I
the
love
partnership 4Xs, and you're like, I didn't do much for that, but we executed. And then, some combination of execution and luck, right? Like it's like, and then there's some that don't go our way, and it's like, that kind of sucks. And you just have to figure it out.
Yeah. I love that. So I want to shift gears a little bit, and I want to talk about scale, right? And we've talked about this kind of throughout this and this journey on, your core way that you guys bring in business. In some of our conversations, and one of the things I really liked was you were talking about, and we hit on this in the beginning, where you said, I want to circle back to, you evolved through these stages. The company evolved, and you were able to evolve with that company, and you're at 400 employees now. How do you see those distinct stages that got to here?
It's a very good point on holding the position. I haven't talked about this that openly, but I've reflected on it a lot, that like I always knew that there was an opportunity for me not to live up to the next level. And every day or week or month or quarter or whatever you wanted to think about, trying to figure out how do you evolve your skill set for the next phase. And I was open about it actually with our CEO, Ben, of just being vulnerable and saying like, I don't know if I could do this if we had 100 more people. What do I need to do to get there? Like what should I be working on? And again, it goes back to that coaching and like being open to mentorship and leadership coaching and all that stuff. And that's been like a very big driving spirit for me, is to try to maintain my position and recognize where I'm at or where I'm trying to get. And you asked about the phases. I mean, for me, there's been 3 phases, and they're each wildly different. And I think I've been good at 2 of the 3. The first phase is that like scrappy startup phase, which you romanticize about today.
100%.
And I mean, it's so fun to think back on it. Like, I mean, I have a 3 and 5-year-old, so it's like looking at baby pictures. You just like, all you remember is just how beautiful it was, and like not the chaos. And
tell us real quick about the first office.
Yeah. So our first office was a month-to-month lease, kind of near Franklin University in Columbus, and they were doing a lot of construction around it. But we got an 800 square foot studio apartment, and it had like the basement glass on the front, and it had the door with like the bars on it in the front of it. And I'd say about 80% of the time there was a gentleman down on his luck sleeping outside that door. So if you wanted to like come in, you kind of had to like nudge him a little bit. It's pretty sad. And the scrappy days are like, one day you might be like putting on headphones, writing marketing copy for the website. Well, one morning, every afternoon, I made 350 cold calls every afternoon.
This is before like pure auto dialers.
Yeah. So I hired one agent, and then we hired another. So there was 3 of us, and we didn't have partnerships yet. We had like one carrier. We had all these aspirations of building the best tech. But at the time, like we had a spreadsheet and like Like that was it. And I just wanted, somehow in my heart, I was like, I should be dedicating my time to, at some point every day, to trying to sell an insurance policy. I need to, there needs to be a Slack icon that goes sold a policy every day. Like we need to show momentum. We have to. It's actually my reflection back on it. It's like, you can get caught up in being like, oh, I'm too good for that, or I shouldn't be doing that, or like other people should do that. It's like, no, you literally need to sell 15 policies this week and show momentum, and then sell 20 the next week. And if we get to 30, we'll do a happy hour. And like literally cold calling aged list mortgage customers, not even insurance. I don't even know why we're
So it's actually, I would actually put that in the cold call category.
Oh, cold call. We had no business calling these people, just to be clear. They were mortgage customers that had bought a home in the last 3 years. And we had access to the list. We were able to call it. And so that was good enough for us. And then I would spend a lot of the other time like doing the other parts of my job, like trying to find carrier partnerships and convincing carriers at that stage to appoint a scratch agency that not only is going to sell in 50 states, but requires an API connection, which was really unheard of at the time. We built all of our own rating technology. They're like, just use EasyLinks, PL Rater, or anything else. I'm like, no, we're building it. It's our long-term vision. We're going to be this embedded partnership. It's going to work itself out. And convincing them then versus convincing now is obviously different. And so I finally get one of the big IA carriers to make a site visit to Columbus. And we're, again, still in this spot. Door opens, 3 guys in a suit walk in, 3 guys in a suit walk out, door closes. And I get a phone call, and it's Pete. And Pete's like, hey, I'm trying to find your office. I can't find it. And I'm like, Pete, I saw you. You can come back in. We can walk to a coffee shop or something. And
Pete's at the carrier.
Yeah.
Yeah.
And he tells the story all the time now.
Yeah.
I'll make sure he listens to this. And, you know, it's just so funny. And now we're one of their top distribution partners, and we are who we are. And it's a big laughing matter. It's like so funny. But at the time, it's like, that's where we were. And it was odd, right? That like there was no office there's no office in the office, I guess.
Yeah.
Like it's just all open. So I'm like, let's walk across the way and like get a coffee and like we'll talk about the vision. And they gave us an appointment. And so, you know, those days are really fun. And then you have to figure out. So then we signed a big mortgage partner, and we had to start scaling. And so we call it like 0 to 1, 1 to 2, 2 to 3. Yeah. And so like 0 to 1 is like that startup phase where like everyone's just bought in and like you're trying to figure out anything you possibly can. The next stage gets super awkward. At least my experience with it is, and maybe I just did it wrong. Maybe if I did it next time, I would hopefully learn from mistakes. But you're trying to figure out where to be professional and where not to be. Like, do we need HR? Okay, probably. Like, who's it going to report to? Okay, who should be our head of sales? Should we hire someone, or should we promote from within? What should we do for this, for that? And there's all these personnel decisions that you have to make when you're growing up and trying to get to the next phase. And we certainly made some mistakes along the way that I think set us back. And I think it just comes back to like my learning from it is just not having a very, very tight vision and strategy to align with the structure that we needed to identify the people. And more so just said, hey, I think we could really use this. Like that makes sense. Let's go hire this person. And starting with that, and then trying to put that person in play, and then giving them autonomy, because it's like, hey, it's your show now, like go figure it out. And then that being a bad hire, and then it reversing course a little bit, and you start to lose some identity. And you know, there's a lot of learnings in that phase, and you know, you still figure out a way to like grow, but that's when you're trying to capture that product market fit and like scale it tightly.
Yeah, absolutely.
And you realize that like building a tech company with an operation requires the right people to intersect. And that was our biggest challenge. And, you know, it was a trying time for my peer, our chief product officer, to try to work together because execution was so hard downstream within the agency if you had the wrong leadership in place. Sure. So everything we were building wasn't really landing in the right way. And so that phase was challenging. And then the one we're in now is, you know, there's parts for sure that we need to improve, but our leadership group is the best I've ever worked with in my entire life. And I started to adopt a personal philosophy, which probably got me to stay at this level, which is hire in people that are significantly better at doing that job than 100%. I am.
Yeah.
So I'm not micromanaging.
Yep. And
so I'm setting the vision, creating the strategy, golfing. You're not supposed to say that.
And these people are great. And so is my handicap.
And so is my handicap. It's gotten better. And so like to see that, like that's been the most rewarding part of the entire like 14-year journey of being like the day one person, is now looking around my leadership team and our collective leadership team and being like, this is a group I want to like hang out with.
Yeah.
Like, this is like the group I'm inspired to be around. This is the group that can take us to the next level without much at all, like without changing anything. Like we have the team now, we can get to the next spot. So it's less chaotic, it's more fun, because execution's fun, and it's like similar to this. It's different than that scrappy startup phase, but it feels similar in the sense that like everyone's rowing in the right direction.
You know, I'll give you some interesting feedback that you probably don't even know. I've heard from multiple people that have been at Matic and are no longer there that have said Jeff in particular is one of the best leaders I've ever worked around. I meant to tell you that when we were talking before, but I did not. So it's interesting.
I'd like to find out who. Who did you pay?
You were talking a lot. You've been talked a lot about reflecting and on these different things. And I know just in our previous conversations, you're very reflective, and something that I personally believe in a lot as well. You know, if you're looking back at this, you know, in each one of these different stages, I'm curious, what is something that you had to stop doing as you went into each new stage, you personally?
That's a good question. So at each stage, what's something that I had to stop doing? Okay. I'm trying to break it down by stage. At the first stage, I had a big problem being like this servant leader that wanted to do some like the mundane tasks. Actually, I got in trouble for it. Like our CEO called and was like, "Hey, I heard you went to IKEA to get desks. Do that again, you're fired." And I'm like, well, the team is selling, and like I'm like, I just went out and like I got desks. I figured like he's like, hire a task rabbit, do anything but that. Like,
yeah,
that can't be the number one thing you got to do today. And I was like, man, that like makes so much sense. And you know what I mean? I'm like, I should not be doing that. Like, here I am, like all high on myself. I'm like, I'm gonna go get the desks for the team, and it's like, you couldn't order them online for delivery. Like, spend $35 on the delivery fee from IKEA. Like, so I think there's certain things like that in the beginning phase that were just like not, shouldn't have done, but did anyways. So I wasn't sure like what to do.
Yeah.
In the second phase, it was all about hiring, and I think we made some wrong hires, and I think I kept those people too long.
Ooh, I can empathize with that one.
And I actually bring that back to just not having the right. It's not, honestly, like I have enough ownership in me to realize that wasn't a them problem, that was a me problem.
100%.
Like I didn't know what I was looking for,
and it was best for them to part ways.
100%. Yeah, and it's just like hard for people to do that sometimes. But when you hire in, if you don't know where you're trying to go and how you're going to get there, and the budget that you have and what you expect out of them and the KPIs that they need to move, then how do you find the person? And so if you start with the person, and I know like the Michael Collins book, Good to Great, is like very popular, and I'm not like anti like find the right person and get them on the bus and see what happens, but I do think that can be dangerous. Like I do think that if you just hire someone based on like their tenacity and like their ability that they've done to some other company, and then you hire them and give them a completely different task that they don't know how to do, it's ambiguous, like it's just not going to work.
I think it's harder the bigger the company gets.
Yeah, in the beginning, I guess I was as I was saying that, I was like, maybe I was that person, like the day one thing for the first company.
Sure.
And they're just like, hey, like he might have it. Like, let's see if he does. And if
Generalists
not, then
thrive.
And so when you get into that phase two, it's like they don't thrive because you really need something specific. I'd say right now, the biggest thing is just, it's not like stopping, but it's more of like just really empowering my team to just go attack their goals and trying not to be there in like the core decision moments, and like letting them make those decisions without me or needing to be there. And so that's been this like iteration of like maybe like that 2 to 3 of just empowering and trusting the leaders that I already said were better at the jobs than I would be at their job, and just setting very, very clear expectations, and then like not being a bottleneck of like Jeff has to be in every single meeting and every single decision.
Yeah.
Which has, I think, built a better leadership team at Matic, and more time for golf.
More time for, which all comes down to more time for golf.
More time for golf. No, and honestly, like that's unlocked so much more for me, and I'm having a blast right now because I can focus on, like I'm actually for the first time focusing on like 6 months plus and not like quarterly. And so there are things that I'm working on that are the exciting next chapter. And I don't know exactly which will land first or what will happen, but being able to focus on that is only possible if the core is stable. And it's hard to get the core stable in a startup. And once you start to see that it's stable, then you have to figure out what to do with your time.
Yeah.
And you realize it's not that hard. There's all these things that we should be doing that'll make us the next level company. And you just need to apply yourself to those things and realize that your team's got it. So it's not like I'm gone. It's more just like they got it in those in-game decisions. Like I don't need to be at every single meeting, which changes things.
It frees you up to work on the things that can now exponentially move the company to that next level.
Yeah, and the things that like I'm actually better at.
Yeah.
And like I'm good at and I like doing and I enjoy. And so it works for both sides.
Honestly, I don't think I can pick a better place to wrap the episode up. That was excellent. We got into all the things I was hoping to get for. So Jeff, thanks for coming on, brother.
Yeah, thanks for having me.